What's up, everybody? Welcome back to another episode of Blazing Crypto Profits.
You're jamming with the hottest disc jockey.
All right, let's get to work. So, guys, today's class is going to be about the pullback buy and the pullback short. Okay, so depending on how fast we get through the material, we'll go ahead and move to pullback shorts. But we're going to focus on the pullback buys for now, okay? So, pullback trading. Let's try to understand what pullback trading is and how we can profit from it, okay? So, pullback trading is very consistent. It's a very consistent and reliable way to profit in trading. What we will be focusing on here are nice, clean pullbacks. Pullbacks to moving averages or price support. So let me just see if I can just give you a little example. Okay, maybe this will help right here, this Paint 3D. Hopefully I don't have to set anything up. I can just start drawing. Come on, let me see. Oh man, come on. Come on, just to do some painting? You want me to do all of this stuff? Okay. My bad. Okay, so when we're talking about pullbacks, right? What do I mean by pullback? All right. So imagine this situation, right? Say a stock is doing its IPO. It's its first day. Let's say the stock, goes up, first day. Second day comes down, first day comes up, second day comes down, first day comes up, breaks out, third day, fourth day, keeps going up, right? And then you'll have your moving averages, right? You have your moving averages coming up under that puppy. That'll be your 9, let's make this a little bit thinner. This will be your 20, you know what I'm saying? And your 50 and all of that stuff, and they'll be coming up to this price action here, right? Let me see if there's a way to erase all of this thing at once. Let me see if I can just make the screen white. Nope. Make the thickness of the eraser bigger. All right, so let's go back to this this example of a pullback. Okay. So, price opens up, price opens up, and then it's trending, it's making its higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, right? And remember we said I had our moving average, so let's just pretend that, the 9 moving average is the one we're looking at. Right, and this thing is just trending up. It's trending. It's going up, right? So price goes up, and then it starts to pull back into support, or your diagonal support area. It starts to pull back into your moving averages. It starts to pull back. So this would be considered a pullback. See, this right here, that pullback into support. This right here, the pullback, and then the reversal back to the upside. See, you got a pullback, then reverse to the upside. You got a pullback. See, it's going up, but then it starts to pull back. You see? And the same is true for the opposite, but let's just focus on the long side now. So, what you will notice in some of the upcoming slides are relationships. Now, what do I mean by relationships? You're going to be able to determine if a stock's price history or price action has any sort of relationship with the surrounding moving averages. Okay? So that's what I want us to focus on. I want us to focus on price history in relation to the moving averages. Okay? So we're going to get into some examples, but let's just try to understand this. Okay? So by the end of class, you will be able to identify if a stock has momentum. You know, by momentum, I mean if it's, no longer going sideways in the moving averages. It's actually making higher highs and higher lows. Higher highs, higher lows. It has momentum. You see, it has momentum pushing it further in the direction that it's going. You see, as opposed to a stock that's in its accumulation phase and it's just going sideways. So you'll be able to tell the difference between a clean and orderly pullback and a crash pullback. See, when we're trading pullbacks, we want to avoid crash pullbacks. We want to avoid sloppy patterns in general. Okay, so there are a few criteria that we as profitable traders need to make sure line up before we can place the trade. These criteria include, when we're dealing with the pullback, we want to look for criteria such as an oversold reading on stochastics. Remember, we talked about stochastics. When the stochastic dips below 20, that tells us that, hey, we may need to start looking for a reversal soon. Okay, so we want to look for relatively lower volume on candles that inform us that price has gone lower. You see what I'm saying? So what I mean by that is, in your pullback, right? When you're doing your pullback, right? So say you got, the stock is trending, higher highs, pulls back to support and goes higher, 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 pulls back to that support, goes higher, 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 pulls back to that support, goes higher, higher, right? So on the pullback, the volume bars that directly correspond, you see, so on these up days, you're going to have, big green candles, blah, 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 above average volume. But on the pullback, we want to see this right here, because price is going to be going down, right? These candles are going to be red, right? Remember we learned about candlesticks, right? It's all starting to click, right? We want to see these pullback volume bars, like, tiny, no sellers, just profit taking. These people are just taking profits. That's the only reason they're selling. Sellers are like, man, I don't want a piece of this. Sellers are like, I don't want to jump in front of this train. You see what I'm saying? I don't want to get crushed. So there's no sellers there. They're gone. Right? So that's what we want to see. And I'm going to show you some examples. I just want you to try to understand this in your head. Okay? So We want to see those relatively low volume bars on the sell side. Relative to the buy volume bars. Now, we also want to we want to look for our moving averages to be close by the expected bounce spot. We want our moving averages to be close by that, and we're going to internalize this as we go through the slides and go through more material and continue to perfect this craft. Okay, so have no fear if you don't understand it right now. It's okay. You will gradually understand it the more effort you put into seeking to understand it and trying to understand it. You see, if humans could just learn anything in one day, what would be the point of going to school for 12 years, right? Or you know, all these years. If we could learn how to do surgery in one day, brain surgery, you know, what would be the point of going to school all these years? So you got to put in the work to really internalize it and make it second nature. So we want little to no overhead resistance on the daily chart. You know, meaning, so like if I said, you know, this was the daily chart, and say this was the IPO, this was the day it started. I mean, this birdie can fly free, right? This birdie can go anywhere it wants to. You see? Man, that's a horrible arrow. This birdie can fly anywhere it wants, right? So, we want that little to no overhead resistance on the daily chart. So our birdie can fly free and we can really lock in these gains. All right. And, you know, we also want the volume and liquidity, but that's something we could cover in the risk management class and when we start to really go over our strategies, and so you have everything on your plate to start to begin to practice. Okay, so let's go ahead and hit the next slide. All right, we're about to get straight into it. All right, so this is ANGI. So I wrote here is a nice 9 EMA bounce. See? 2 setups in one. Let's see what we got here. All right. So this is ANGI. So stocks seems to be in a little bit of a accumulation phase here. But then we got a nice break over this resistance area, right? As the stock gapped up, gave us a pole, and then gave us a flag, but you know, it's not that perfect flat top flag that we want, right? What is it more like? It's more like a pullback. What's it doing? This thing is pulling back to the moving averages. Imagine somebody standing on the moving average with a daggone lasso like this. Whoosh, come in. And pulled it back to the moving average. Once it gets to that 9 EMA, that 9 exponential moving average, it bounces. So it goes, come here, boing, and then bounces in the other direction, right? Then comes up again. Now I want you to notice here, right? Look at the volume on these up days. Look at the volume here. Whew, your boy is blazing up in here. Look at the volume on these up days here. Super high relative volume. I mean, it was almost about 2 million shares as opposed to, you know, less than half of that on an average day, right? Then I want you to look at the volume on the days that the price was going down. See, there was no short sellers in there. There was no fear in there making people wanting to get out of this trade. You see, this is just a slight profit taken from these people who had it like right around here. That held it for a few days as it came to the moving average. Slight profit taken up here, up here, up here. Then you get that doji. Then you get that reversal. Bam. then you start to see your volume start to pick back up a little bit. But see, you and I will be prepared. You see? Then when the regular people see volume and they want to get in because they see big volume, then it's kind of too late right then. Then you gotta wait again. We don't want to do that. We want to catch these puppies as they're pulling into the moving averages, breaking a downtrend, and then reversing on significantly high volume, or at least strongly. If we could judge the intraday action, we can judge the intraday price action and determine. That will help us determine better the outcome of the next day. Like if stock comes down intraday, goes up and stays high and tight, it's probably a high chance that it's going to man, thanks. Right? So we want to be ready. We want to be prepared. We want to make sure our criteria is hit. Now, look at this. On this particular day, when these bounces happen, it wasn't yet it wasn't quite oversold. It wasn't quite oversold, but it was close. And sometimes, things, when you're looking at your trades, they're not going to be perfect. They're not going to be picture perfect, but you want to try to get as close to all of your criteria being hit as possible to increase your odds of success. So like I said, we got two setups forming. So, we got this one pullback into the 9 EMA, and we got another pullback into the 20 EMA. And you can see it's the 20 because it says moving average 20 right here. And then exponential non-moving average is this line. So, but this one's not as clean, right? We see this candle right here looked like it wanted to bounce off of the 9 again and continue higher, but it didn't. This thing actually pulled back. It actually broke the 9 exponential moving average and pulled back and bounced off of the 20. So it came in, bounced, and then continued higher a little bit. And then, like I said, we have almost like another flag starting to form right here. You see? So go ahead, screenshot that, and then let's move on to the next slide. All right, so this is MVTA. So this is MVTA. All right, so stock pops up and it starts to trend, right out of the gate. Comes out of this accumulation phase here. Could be another flag on another time frame that is popping out. It could have been a base breakout, but in any case, we have a breakout. You remember how we talked about the breakout and the breakdown trading? When stocks break out of that accumulation phase, that's when they start to have momentum, or that's when they're supposed to have their momentum. You see, so like for example, as this thing broke over this resistance here, then, for example, right, check it out. You see the stock price action moving just straight through these moving averages like water, right? Just slicing through them, floop, slicing through them like they're not even there. You see? But then as we get the breakout, look at the consecutive days that the stock was respecting this moving average. Look at the relationship that it now has with the moving averages. As you can see with August, like right a little bit before August and beyond, and before that, to whatever time we can see, or we're looking back, we can say that, for the past couple of months, this stock's price action has not really had a relationship with the moving averages. It's just pretty much going sideways. We can't judge any pullbacks. We can't use them as support because they're just sliding through each other. But then we get the breakout. Now we can see, or at least what we want to start to look for first, is the first relationship with the shortest term moving average what we want to look for first is the closest relationship we can find with the shortest term moving average. So we want to start looking for that 9 EMA bounce on our daily charts, right? Right. So we got our day jobs. You know, this thing pops up, boom, breaks out on, you know, high relative volume, because this volume is high relative to the volume preceding it, to the volume on the days before, right? And then, so we watch this thing, we may watch this thing the next day if we didn't catch it this day. And we're like, okay, this thing made a new high. It's respecting the moving average. We might want to get in. We might see this resistance area forming with these two candles here, right? Look at that. A resistance area, then it broke over. We might want to buy it in there. In any case, we want to try to get in this thing as early as possible, as close to support as possible, right? But even if we didn't, say we just seen it and it's running up, we want to then wait for a pullback so we can catch the bounce. Isn't this amazing? Look at this thing. So stock is just breaking resistances left and right, breaking this resistance form here, broke it. Resistance form on this day, broke it that day, then came down, got caught by the moving averages. Now this is not, I wouldn't consider it a pullback. You can't consider, see, and now, see, and not even just now. My own educator repeats this over and over. You can't say that 1 or 2 days is a pullback. You need 3 or more days to consider that stock pulling back, you know, or reversed. You want to at least have 3 or more, you know. So this stock pulls back into the moving averages, right? And then it does bounce intraday. Thank you. Yes, I'm sure. Thanks, Mom. This is perfect. You see, so it did come down here and bounce up at this moving average here, the 9 exponential moving average, but it wasn't strong enough intraday. So as we can see, the stock went up, but then it came down and closed that low of day, saying that, hey, man, this thing is going down. Cracks the 9 exponential moving average, right? But look at this. I want you to notice this volume, man. This is beautiful, man. This is beautiful, man. This is beautiful, man. Let's get this thing a round of applause, man. But notice that volume. Look how low it is. Look how small it is compared to these days. I mean, this has to stand out to you so clear. And then, once this thing comes down and, you know, people are watching this thing for a couple of days. Once it comes down and taps that 20 exponential moving average, that's your second level of support that you're looking for this thing to bounce on. You see what I'm saying? Now, if it truly, really, I mean, now, if this thing had the best momentum ever, that's when it's going to start to trend up that 9. But then as momentum slows, then it'll start to trend up to 20. And then as momentum slows even more, it'll start to trend up the 50-day moving average. And then it starts momentum starts to slow down a little more. It'll start to maybe bounce, or it'll probably crack that 200 and then start to trend the other way. Oh, man, this is beautiful.
Excuse me.
So, then I want you to notice how big this volume is. So as the stock comes down and bounces off this moving average, boom, price comes down, but it doesn't stay down. Buyers come and take this thing up because they know it's about to go down. The pullback buy, right? So they come and this is what these people do all the time. This is what they do on a weekly to monthly basis. They look for these every day, and then that's all they do. That's all they do. This is all you have to do. Look at this thing. You buy this thing with a stop right under that moving average, right under the low of that day. And look what you got the next day. Gap up. Bam. High relative volume. Next day. Bam. I'm scared to look and see what else is after this, man. If that thing closes a high of day, let's just check it out.
You good?
Yes. Thanks. That was MVTA. Bam, bam. My daily back. Bam. So look, this thing did give us one more day, right? Came out this little flag here. Came up, came up, came up. Didn't bounce off the 9. Tapped that 20. Gapped up the next day. Boom! Right out of this downtrend, right out, and then we got the pullback, right? The bounce day. This is a bounce day right here. Or even this, all of these things are saying the daily right here is saying bounce. That's what it's saying. It's not saying short me, short me, short me. As long as it's above these moving average, it's saying bounce. So what does it do? Comes down to the 20, bounces. So we did get actually one more day out of this puppy until now this epic downtrend has occurred. Look at this thing. Disrespecting this downtrend line now. Bam. Bam. Right? Woo! So we're just talking about these patterns here, guys. We're just going over patterns and the criteria to look for, you know, as far as these patterns are concerned. So we're going to go, in the risk management class, and we talk about the strategies. We're going to talk about managing our risk. We're going to talk about, you know, what to do in certain situations, the best way to take profit, you know, all of these kind of things like that. So don't worry about the money part right now. Just remember about the pattern, this pullback. What is it? It's a pullback to support. It's a pullback to moving averages. You know, it's a pullback on relatively low volume. It's a pullback that is hopefully coupled with oversold stochastics. You know, stochastics that's almost at the 20 level. Look at this thing with that 25. See, you're looking for that reversal, and you got that reversal back up to 80. Then they say, hey, man, we're a little bit oversold. Bam, dropped. You see, so what if we were in this thing? And, you know, our strategy is to ride out stop up about moving average, but the moving average it doesn't even make it to this point yet. Where do we put our stop? At the low of the candle? Do we put it at 50% of the candle? Do we take half off the table at 2 to 1? You know, if we start to make 2 times what we risk. So these kind of, and these are all questions that we're going to cover in the risk management class. So don't worry about it right now. Just focus on this pattern. This pullback. Imagine taking this trade. Imagine capitalizing off this trade, okay? Over and over in as many different forms, because this is just one. And we got some more to go through, right? So let's go through the mess.
Just to you can add to your breakfast. Sweet onions or something. You know, with the red peppers or whatever.
Mm-hmm.
And gravy, some people like put that on there. Put something in. No, it would be gravy, but butter.
All right.
I did put a little butter on there.
All right, I'm recording the video.
Okay, sorry.
All right. So now let's look at this stock here, MVCR. Now we want to try to identify, as we're looking at the stock. Let's pretend we're pullback buyers. This is what we do every day. And we want to see if this stock has any relationship with the moving averages, something that we can say, you know, something that we can look towards to say, hey, I want to look for a bounce here, right? I want to look for a bounce here. You know, so let's start the process of elimination. Let's look at how price is reacting to these moving averages. Even though it's uptrending, look at that. It broke out here above, you know, this downtrend resistance, small downtrend resistance on higher relative volume. Then we got a nice pullback into the 9 EMA, right? Now it does crack it a little bit, but then we do get that bounce. We get that reversal that we were looking for. Then price trends higher, but then next time it comes back down to the moving average, to the 9 exponential moving average, it doesn't hold it. But what's close by? It's cousin, the 20 moving average. So a bounce occurs there, but it's not a super huge bounce. It's not a super huge bounce like we just saw on NVTA. So price starts to go sideways, it starts to consolidate. You know what I mean? It starts to squeeze and compress and go sideways and form a range until the next time it breaks out on strong high relative volume. And then we get that uptrend, we look for that pullback. Now, you see these wild candles? See how these candles just a little bit bigger? On the sell side, even though it's not high sell volume, look what it does. Cracks the 90 MA on the first day, small tiny little bounce, then continues to crack the 9 again and the 20 for the next couple of days until there's no longer a relationship with those moving averages. We cannot depend on these moving averages at this point. At this point, we can no longer depend on them because they're not holding up the stock for us. You see? So we got to look for stronger support. And where do we see the price action holding? The 50 moving average. This is my 50 moving average. We start to see price action holding this thing, you know, not even touching it, getting close and then moving away because the buyers are there like this, you know, they're ready to get it. It's coming down. Boom, 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 give me some shares. Boom, 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 give me some shares. Like that, you see? This is just imagine. So the buyers are here, they're scooping up all the shares right here because they see there's no relationship with these moving averages. They're like, all right, the 20 has to bounce. If it don't, then you lose the trade. One of many trades that you will ever take in your life. Bounces off of the 50 moving average, comes up, gets rejected by your 9 exponential moving average and your 20 a little bit, comes back down, bounces off of your 50 again, and then finally squeezes over the 9 exponential moving average and your 20 moving average. But now we have some downtrend resistance. We have some overhead resistance now we got to try to break out of, right? So look at this thing. Once we get a new high that starts to proceed lower, we go ahead and take our trend line, just drop it on it. Bam, right? Drop that trend line on there. And then when it breaks our line in the sand, we got to get back in. You see, so this thing gave us a pullback into the 50 moving average. And then as it started to consolidate into a flag, you know, we would still be in the trade because it never broke our support area, see? It never broke our stop loss. It never even came down to test our stop loss. You see? All we're doing right now at this point is raising our stop loss. Is raising it, right? So look what we get here. We get a break over this resistance line. Traders know it's on now. That 9 exponential moving average and that 20 exponential moving average is curling up under that puppy, holding it up, ready to let it fly. Boom! Then what we get? So now we see that the stock had the relationship with the 50. Came down here, bounced a little bit, went up. Came down here, bounced a little bit, bounced a little bit. Boom! For last time. Didn't even. This is a perfect example of higher lows. 1, 2, 3. 1, 2, 3. Higher lows. Boom! Look at that. And you get that breakout there, right? And you get another higher low, right? Boom. And you get another higher low. Boom. And another higher low. Boom. And another higher low. Right here. But look at this thing. So as this thing breaks out of our flag, we could call this a flag. We can consider this a pole. We wouldn't be wrong for that. See, what we're going to start to realize is that, you know, each setup is unique in its own, but in a lot of ways, these setups are part of each other. They're a part of each other. Like the pullback could be the first part of a flag, or it could just be a pullback, 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 pullback. Or, like I said, it could be the first part of a flag. Pullback, bounce resistance, pullback, bounce resistance, break resistance. And then you have your flag. You have your pull, pullback, bounce resistance, pullback, higher low, breakout, right? So what I mean when I say that these setups are, you know, like really related to each other, you're going to understand what I mean by that as we go through the intraday setups. Now, this is the last class here for that we're gonna talk about for swing trading setups. Last session, the pullbacks here, and then we're gonna transition to intraday trading, which is even more hardcore, but it's what I feel is my area of expertise. But even this, just know this, right? These same patterns that we're talking about on the daily time frame, as we would be taking these trades, you know, day by day, we'd be in it, you know, at the end of August here, you know, whether it's August 24th or something, right? And then we'd be out, you know, September 15th or something like that, right? You know, 20 days I was in this stock, you know, and it gave me a $10 move, you know.
Coming 2000.
So what I want us to understand is that these same kind of patterns occur intraday, meaning they occur in the time span of one day on smaller time frames. Right? So imagine like anybody ever taken like a biology class in school or whatever, and you learn about the cells, right? So just imagine, right? You got that one cell. Say it's a blood cell. In that blood cell, there's multiple other cells, right? And then even in that, there's other cells. In those cells, there are cells, right? On top of cells. So cells on top of cells. So just think of that the same way that you think of these charts. You see? Imagine this daily chart is a cell. You know, and this cell is made up of, you know, one of your daily candles. So in each of the cells, imagine this whole lifespan of the chart, right, is one cell. Then as we zoom in, we see that we have little cells that make up the complete cell. Then, even if you zoom in on the cell that makes up all of the rest of the cells, that makes up this big cell, you zoom in on one cell, like say we go to the 4-hour time frame, and in that one day, we have, you know, two or three candles. We go to an hourly time frame, and that one day we have, you know, maybe 8 or 9 or 10 candles. You know, 30-minute all the way down to the 1 minute where you have a candle for every minute. But just imagine, so we're looking at these things on the daily chart, these flags and these pullbacks, but these things also occur on your intraday time frames. You see, so we could capitalize off of these things in minutes as opposed to days and weeks and months. But like I said, we covered that at the beginning of this class when we talked about the pros and cons of day trading and swing trading. Let's move on to the next slide. So this is ULTA 9 EMA bounce. So far, so good. All right, so we see we got a nice flat top breakout here. See this resistance area. Then stock finally pops over your all your moving averages. This birdie can fly free, starts to fly a little bit, then starts to find some resistance, and it comes down. But at this point, you know, we got no relationship with the moving averages, right? Why? Because it's just slicing through it. We cannot rely on these moving averages as strong support because it's not. So then we got, you know, a pullback into the 200 moving average, then another bounce into resistance. Pulls back to the 200 moving average, then finally cracks all your moving averages, cracks that 50, then has a real strong day that puts it above all your moving averages and resistance and it has high relative volume. So now this thing has momentum now. Now this thing has momentum. Now we can start looking for the real pullbacks. We can start looking for the real pullbacks. That's the one that's going to take us higher and higher in price on a daily basis. You see, so look at this thing. Comes here. Oh, man. Dang, this is beautiful. Look at these days. Now, this candle closed, you know, a little bit above 50% of its whole day. As you can see here, sellers came in, you know, at the top and tried to take it down, but they couldn't, right? Because where are they going? They ain't going nowhere, right? They got nowhere to go.
Really cool.
Right? So, see another resistance area forming, then we get a pop over that. And then we get this tiny pullback, right? Into into the 9 exponential moving average.
Wow.
Oh man, so funny. So funny.
What did you say?
I said we got that tiny pullback into the moving average. Into the 9 exponential moving average. Our shortest term moving average. The one that shows us truly how much momentum the stock really has. When it starts to fly above that 9 exponential moving average, that stock is the most momentum it's going to have. The only momentum that's more than it flying above the 9 exponential moving average is when these things just go straight parabolic like this. Floop. Come from sideways. That's parabolic. When you see the stock going straight up, parabolic. People are going to say that. That's called parabolic. So stock starts to go parabolic, comes down to the moving average on low volume. Look at that. Look how tiny that sell volume is. Look how tiny. You want to watch, man? You want to watch this lesson?
I'm listening.
Hey, come on over.
I'm listening to what are you doing?
And you can watch the other videos too. I'm gonna pause this thing while I chew. So, like I said, I want us to be mindful of this high relative volume, and I want us to be mindful of this low volume bounce to the 9 exponential moving average. Now, I want to check out and see what happened because I did write so far so good on here. Now, I didn't take this trade. I could have took it on simulator, but I didn't take it on simulator because at the time I was live and, you know, I was in my own head just trying to win and trying to be the best. So look at this thing. So when it finally popped out here, this is it right here. Bam. So we got that nice flat top there. Got a nice range break. See? So you can almost consider this thing a base breakout, right?
Mm-hmm.
This thing came down, right? Came back up, couldn't reach these highs. Right? Then came back down to that bottom, bounced off of the support area down there. Well, you know what support? Well, right here, right? Did we make a low there before? Didn't price get rejected, reversed from this area? Right? So price came down again, bounced off support, came back up to resistance, got rejected, then finally broke above resistance. So we want to say this thing is starting to trend now. So, okay, we had our three, you know, we have our pullback and it's low volume. So let's say we could have bought this thing. Let's look at the math. Say we bought this, say I would have swing traded this thing, I would have tried. You know, at the very best, it gave you, you know, about a $7 move. But as far the way we apply the strategy, it never even really gave us a reason to sell or really move our stop loss because it didn't go really far enough. It didn't really go far enough. But when we're talking about applying our own strategy, this one wouldn't have worked. If we would have applied our strategy to this stock, it wouldn't have worked because we would have had to get out as soon as it didn't hold the moving average right here, because you don't know where it's going to go. It could have kept going down, could have kept going down.
Okay.
You don't know, but all you can do is watch it.
Okay.
Right, but we can also say, all right, we got some resistance starting to form. Right there, it kind of breaks over it. Remember, I told you about that finicky diagonal resistance. And sometimes you do get pops, but sometimes it cannot be as reliable. I much rather prefer horizontal resistance as opposed to diagonal, because it's horizontal resistance is a little bit less malleable, flexible than diagonal resistance. So this thing didn't give us any more pullbacks. These pullbacks resulted in crashes. Now, yeah, you can consider it a pullback, but did it really work? Did this thing give us what we were looking for? No. But that's just one out of the thousands that you may do that'll give you these and these, but all your losses are going to be like that, just tiny. But your winners will be like this. You see, so we have to think about this thing over a series of trades, not just one trade. Don't get hung up on one. Yo, this setup doesn't work. Oh, you know, give it some years. Collect the data. Prove to yourself that it doesn't work. Don't just accept that. All right, let's keep on going. Man, we're already 47 minutes in.
Really cool.
This is probably cool by now.
No, I'm still eating that.
Still eating it?
Yeah. So that was ULTA. Now we got SONC. Let's jump on this puppy. Now I want to talk about pullbacks to price support. Okay, so when we talked about support and resistance, right? Yeah, we did. Right? So you got resistance, sorry. And then you got support. Right? Well, this is price. Price, you know, this is IPO day. It finally comes out. There's a lot of new IPOs coming out this year too, 2019. There's a couple of IPOs coming out. So, this is IPO day. Stock comes up, stock comes up, stock comes up. And then it goes down. Then it goes down, then it goes down, then it goes down. Stock comes up, stock comes up. Then it goes down, bounces off support. Boom, I'm talking about huge rally, right? Now look at this. Imagine you had your trend line on your downtrend resistance. Woo, broke it. You in that puppy right there with a stop right here. And then you just raising your stop loss, right? So boom. So now we see that price is coming down, right? Sorry. So like I said, price is going up, price is going up. Then price comes down. You know, it doesn't hold, right? Comes down. Sorry. Dang, that was horrible. Price comes down. And then what do we have here? Once price starts to come down, what do we want to look for? Well, we want to look for possible levels of support or resistance. So maybe we can catch a bounce intraday, or maybe we can, you know, we want to see if our analysis is correct, because this is going to give you analytical exercises to be able to spot supports and resistances. You see? Don't just use this class as your only source of learning. I mean, I would be flattered, but you would be doing yourself a great disservice, because I'm only one person of 8 billion people in the world, maybe more. And there are so many more traders out there that can give you things in different perspectives, because, you know, my style of teaching may not be the perfect style for you. You'll see? So, but if you can understand with me, you can vibe with me, and you kind of understand what's going on, and you're not afraid to reach out to me for help, then yeah, this is cool. But still also, because I'm continuing to learn from many different traders, you know, alike. So look up also different types of support and resistance. So right, boom. So stock's coming down, right? So we can say, all right, man, this is support right here. I mean, this should be support, since when it broke it this day, when it broke it right here, and then came back down and retested it. When it broke this level, then it came back down to retest it. This was now resistance. Then when it kept going down, but then it broke diagonal downturn resistance, came back to that resistance area, right, from before, that this one couldn't make it back above, but then it broke that resistance. So now price is coming down, and then we want to see if this thing's going to bounce off of price support, right? We're going to see if that thing is going to bounce off price support to come back and give us higher highs and higher lows, right? Look at all those flags. Oh. This is an example of a pullback to price support, or what people like to call it, a lot of traders like to call it, is a retest. So it's a breakout retest, right? So it's retesting that old support level. It's also testing and showing us the theory about old support becoming new resistance and old resistance becoming new support. So if this thing acted as resistance before to price, and then when it broke above it, now it's acting as support for price. That is the general rule of thumb. That is what the majority of traders out there looking to do. Now, you know, hedge fund managers and all these things, they might have something else in mind up their sleeve to push the price around, but who knows, right? All we can do is play the game to the best of our abilities with the knowledge and resources that we have. We cannot speculate on conjecture about what goes on or what moves prices and why. All we can do is memorize these patterns, manage our risk, memorize these patterns, manage our risk, and our own personal patterns as well. So we see this thing break out, then it starts to pull back to price support. Low volume, but we don't get a big bounce off of this price support. Like I said, this is a shaky, this whole year has really been shaky for not just stocks, but, you know, cryptocurrency. I wouldn't say really Forex, but mainly the stock market. You know, the majority, the big, like your index funds and your big name stocks that have pretty much enjoyed this nice bull run that we've been having and still may continue to have. This is a shifting time in the market, and I even just read yesterday about traders. Just talking to I read comments of like a new trader or a simulated trader or somebody who's been in the game, but they're learning and they're on a simulator and practicing, right? But basically, what he said he realizes is that people need new traders need to have the screen time to trade through the market cycles. What? Remember we were talking about cycles? Man, I mean, I go off topic sometime, but this information is just so valuable. It's just so valuable, man. And if you don't see the value in this thing, man, you better pray for it. Pray for it. You say, God, please let me see the value in this thing. Please. You gotta understand. You gotta work this thing, man. Right? So what do I mean by trade through all the cycles? Let's look at SPY. I'm gonna just keep referring to the SPY, the S&P 500. Your market cycles, right? We got a run-up phase. To be able to trade through this run-up phase, right? And remember about the phases within phases. But let's just keep it simple. Remember this run-up phase. Let's go to the weekly. Look at this thing. Imagine enjoying trading during this run-up phase. When 3 out of 4 stocks follow the market, this S&P 500 is considered the market, right? 3 out of 4 stocks follow the market. And this thing has been going pretty much straight up for the past 10 years. How fun would it have been to do these kind of trades? How fun would it have been to do these pullbacks during all of this time? But now, look where we are. 2018, what happened this year? Chop. No longer really respecting the moving averages. No longer. Been going up so long, what goes up must come down, right? So now everybody's saying this thing is coming down. So this whole year has basically been one big distribution year where things aren't really working. So if you became a new trader around this time and things aren't working for you, it was hard, man. This 2018 as a new trader, it's hard, son. It was hard, bro. It was hard because, we'll be doing these patterns. And even experienced traders, I remember being in the chat room and you got experienced traders talking about, oh man, so a lot of these breakouts that would usually keep, would explode, are not really doing, are failing, are starting to fail a lot more now. A lot of these breakouts, these flags, these things should be breaking up by, but just it's important to be aware of the shifting nature of the markets and how it's ever changing. Every day is unique, and Tim Sykes even says this a lot, that it's not just hard to trade, or it's not just hard to learn how to trade. Trading is easy. Ross Cameron said this. Oh, damn. I'm sorry, guys, but I gotta tell you this, guys, because this is gonna help somebody, man. It's gonna be somebody out there that can resonate with this thing, man. I'm looking you in your eyes, and you feel me, and you can resonate with me, and you want to build and win. So that's why I don't care what anybody else says. Other people probably skip off this video right now, but you didn't, because this was meant for you. So let's learn. So look at this thing. We've been in one big distribution market this whole 2018. Small run up. You have to be skilled to really capitalize off of that thing, and just know your surroundings, know your areas. And then what do we have here? This thing is starting to roll over now. Now this was the beginning of the year. Imagine coming into the market. When I first came into the market, 2018. from the cryptocurrency boom, I said, "Damn, man, it's the end of the world." Oh no, not now. I just got in this thing. But look at it. Look at how bad it is now. But now I'm not saying that because I saw a little bit of it before, right? But you got traders who saw these things, 2008, these murderous things, lived through it, lost everything, right? So look at that consolidation phase. Imagine trading through that. I don't even know what it's like to trade in the accumulation phase, where everything's low. All right.
You want some more that you want hot?
This is
Fresh?
fine.
It's good.
Yep,
You in the
this is perfect.
microwave?
Yep, it's perfect. Thanks, man.
I'm gonna mess up your recording.
Huh?
I'm not messing up your recording.
No. I just wanted you to know that I was recording so I wouldn't have to cut you off in the middle of a long, drawn-out conversation to get back to my video. So boom, imagine this accumulation phase. I'm almost done. Maybe. Then this run-up phase. That's the one you want to be in. Distribution phase. Then the run-down phase. Catch all those bear flags. Technical breakdowns. Then the run-up phase again. Distribution phase. Oh, look at this run-up phase. I mean, this is huge. So where might we come back down to here on this on this monthly chart? Right? We want to come back to this thing that we believe is going to be the next best price support. The next best price support is $214.78. That's it. That's not far. It's not far, man. That's not far away. We can easily get to the 214, 215 area. Let's start looking for a bounce on the monthly. Let's see how far it is on the weekly. I want you guys to play with this stuff like this and have fun, man. This is fun. It's fun to me. And if this is your passion, you feel like, man, this is what I want to do the rest of my life, then it's gonna be fun to you too. But if not, then you're just gonna do something else, and that's just the way the world is. So look at this thing. I mean, come on. In a couple of days, who's to say we can't be at 216, that price support, and then bounce and start to go higher? What? People waiting for that. This next leg down. Woo! Man, this is crazy. Let's go. Or we might just see this thing break. But we gonna see, man. Man, this is gonna be fun. It's gonna be a fun year, man. 2019. Right, so that's price support. Let's pull back to price support. Now this thing is on the monthly chart. This thing is pulling back to price support, right? But now this is not low volume. No, it's not. Not for a monthly chart. Even look at the sell volume here, right? This is not a pullback. This plane is crashing. This birdie lost his wings. He got clipped. He's nosediving. Okay? Yeah. That's a pullback to price support, right? This thing is pulling back to price support, but this Sonic is just not clean. You can clearly see it's not clean. It's not the cleanest thing you ever saw. I want you guys to try to look for the cleanest ones you ever saw. You're gonna see this. You're gonna be like, ooh, wait, this is clean. Then you're gonna be like scrolling through your charts, and you're gonna be like, whoa, now this is clean, right? And you're gonna scroll to your charts some more. Oh, now I gotta make a daggone spreadsheet now and start putting the cleanest ones I can find because, man, I'm seeing some clean patterns. Then next thing you know, you're going to be getting better and better, right? Let's see, what's the last clean bull flag I found? Here's it today. That's clean. That's clean. I'm just having fun. Have fun. Yeah, so that's clean.
That's a nice sweet thing.
Yeah. So that's SONC, pull back to price support. Hope you understand this, guys. Pull back to price support, pull back to price support. Bam, bam, bam. All right, this is SFM. Mm.
I have to go to your web. I mean to your thing.
Yeah, just check out the YouTube at BLAZIN crypto CRYPTO profits. So this is SFM, guys, and back here on the daily chart. So let's check this stock out.
Blazing crypto.
Mm-hmm.
What is it? Blazing crypto what?
Profits. PROFITS. And you can start watching from the first class.
Okay.
I mean, now, unless you got some headphones or something. You know what I'm saying?
No,
You know what I'm saying, Shasha?
I don't have any other headgear at the moment.
But yeah, so just so you know where it's at. On YouTube. There it is. Blazing.
Blazing crypto.
That's it right there.
Right there?
No. This one. Click that. Yeah. No.
Okay.
Yeah. This page right here. And you see, look at that. That's the first thing that pops up.
Mm-hmm.
This is the first class right here.
All right.
So this is SFM. And immediately when we start to look for pullbacks, we want to look for shortest term moving average and its relationship with it. Is it respecting the 9? Does it truly have momentum? We can see this thing came down here, cracked the 9 a little bit. And it also converges with your 200-day moving average. Even though it's going sideways, they still bounce in the same area. So you can say that's like double support. You know, it's like double support, double plywood. You see, but even double plywood can get a hole in it if the drill is strong enough, right? So look at this thing. It pops, bounces off of your 200. You know. So we get that nice pullback. You know, it's not the most beautiful pullback, but it is a pullback. Okay. And you know, would this be the way the location we want to take this trade? Maybe, right? What do we have? We got a break of a downtrend, right? Overall moving averages. Then we got a bounce into moving averages. Now also, that break was on high relative volume, signifying that we may have momentum. So as we increase our skills, this will become second nature. So, so look at this thing. Just trending up this 9, just trending up, you know, trending up the 9, and finally pulls back. Where does it pull back to? The 20. Is it going to hold the 20 though? Is it going to bounce off the 20? Traders want to know. Let's see if the thing going to bounce off the 20. What do you think is going to bounce off the 20? Pause the video and bet yourself. Right? Well, I don't know what it's going to do, man. SFM. No, it didn't bounce off the 20. Didn't respect the 20 at all. That was right here around these days. And it just kind of pretty much fell to pieces. But when it came out of this first downtrend right there, that was the opportunity. When it came out this first downtrend, boom, on, you know, relatively high volume as opposed to the rest of the days. You got that spike there. and you got that pullback into your moving averages. Okay, then you got this pullback. Now, even though volume is a little bit lower, you know, it's not really holding your moving averages. And on another note, what did it do on this highest day? Cracked the Bollinger Bands. It was outside of the Bollinger Bands. So it's got to come back in the middle, right? So these are just things to use, things to keep in mind. But look at this. Look at these things. You get a pop up, pull back into a moving average. Pops up, goes sideways, bounces off the moving average. Let's find some better. We want to find some better trenders out there. Let's see if we find some better trenders. So like I said, you know, even as new traders, you might think you know, this flag is perfect until you see a better one. You might think a pullback is perfect until you see a better one. Then you're gonna be like, I'm only looking for that. I'm only looking for that. I'm only looking for that every day. You see, so, and it's the only way you're going to see, you know, what is better is by learning. By learning, by attending classes, like watching videos like this, looking at charts over and over, you know, looking at the different charts, and you're going to see like, man, this pullback right here, this is nice. But but learning the core foundation of the pullback is what's important. That low volume on the sell days, pulling back into a moving average, and then pushing higher. You want to look for pullbacks and stocks that have momentum, not really pullbacks where stocks pretty much just going sideways. We want to look for pullbacks when the stock is in its run-up phase. You see? Let's continue. That was SFM. This is W. Yeah, see, so let's delete that right there. We're going to get some new slides up in here. This is W. Like I said, I mean, this is so many examples in this W. It's not even funny. So we consider this an 50 EMA bounce, a 50 SMA bounce, right? So it comes down to the 50, on low relative volume, meaning that the volume wasn't as high as it was on these up days, you know, like this breakout day, you know, something like that, or a huge bounce day. And when we finally do bounce, you get that increased volume. As you can see, this volume bar is relatively higher than the rest on this day. Excuse me. So stock comes out of this flag, starts to crack your 9 moving average, starts to crack your 20 moving average, comes down. Traders are looking at this 50 moving average to see if it's going to hold. Excuse me. And see if it's going to hold. But it actually, it does push down for a few days, but then it reverses. It reverses. So, I mean, we wouldn't have been able to take this part for a bounce right here because, you know, I mean, well, no. You can't take that, you can't take this as a pullback if it's below your moving average. The next spot you want to look for this thing to bounce is the 200 if it's below your moving average. But if you see a remount, if it remounts your moving averages and it starts to push higher like this, even still in here, I wouldn't want to take it in here because this is, I'm telling you guys, this is stress. And you don't want no stress. You want the cleanest thing you can find. Pull back to a 9 or something like that. Clean, and then get out. You don't want this stress the way you got to ask yourself, man, should I do this? Should I do that? Should I do this? Should I do that? No. So look what happens. This thing pops up and it gets back in free air. This birdie can fly. It's out of the muddy waters, out of the trees. You see? And it comes back, lands on a branch. 9 EMA bounce, low volume. Then that volume starts to pick up, right? Boom. Boom. Now you can get in that. It's above all your moving averages. It made a new high. It broke this downtrend right here of the pullback. You know, only thing we have to worry about now is this resistance area right here. And then look, we cracked that thing. But we also see that we've been in a big distribution market. You see?
You get feedback.
Say what?
You get feedback.
Sometimes. Just trying to build up a following right now. This is really to help me understand the material better. They say when you teach stuff, that helps you learn better, right? When you teach somebody how to do something. So that's your 50 SMA bounce. Now, see, I wanted to find the most recent examples. I want to find the most recent examples of the pullback, because that's what you're going to see. You're not going to see something from 10 years ago. I mean, maybe 3. Like, when you start to go in your charts and scroll your charts, just look for times that stock pulled back into a moving average and then bounced off of it. All right, so if we go to, let me see, open up my favorites here. All right, the market is just been changing. Look at this thing. Flag. It's a flag. Like I said, now we really can't consider this a pullback, because what is it doing? It's going sideways. So it's respecting the support. It's consolidating. So we can't really consider that a pullback. What can we consider a pullback? Well, this right here, we can consider that a pullback, but it didn't hold any of the moving averages. You need those 3 days, but by the time the third day came, it was already under all the moving averages. And now the shorters think this thing is going down. So they get squeezed, right? Another one. Look at this. MDXG. Look at this thing. Accumulation phase. Pops out of a nice flag right here. Pulls back into your 9 EMA. Here's going 9. It gives you a 9 EMA bounce. 9 EMA bounce. Let's continue on. This is BRKS. I think it's Brookstone. Oh, Brooks Automation. I mean, but look at this puppy. Now this is clean right here. This is clean. Let's see if we can look at it on the chart. This is BRKS, right? This thing is exponential. Let's make it simple. All right. So look at this thing. This thing's kind of flagging out here. See that 50 moving average? Once that 50 moving average comes up, pushes it up. Starts to flag out again. You got so we got a 50 EMA bounce right here. Another 50 EMA bounce right here. But this time, people looking for that 50 EMA bounce, they didn't get it. Because we got that crash. Because this is that crash right here. That crash pullback. See? Your sell volume is increased. That's telling you, hey man, there's a little bit more sellers here than we'd like to have. There's a little bit more sellers here than we'd like to have, man. I don't think I want to buy this kind of pullback. And you'd be smart not to. You see? Look at here. Look at you. What if you try to buy this? Thinking, oh, what about this? This is pulling back to the 200-day moving average. No. That thing is crashing to the 200-day moving average. It is free falling, nose diving, bungee jumping without a cord to the 200-day moving average. You don't want to be in that thing. Remember that Will Smith show? Hillary, will you marry and then he smashed the floor, trying to bungee jump. That's that thing right there. Will you marry me? BRKS. Splat.
Splat, yeah, because it's too long.
You see? So we don't want to consider this a pullback right here. This is a crash. Get out. This is bad news. The CEO just raped the secretary or some crap. Sexually harassed the secretary. Sell your shares. Uh-oh. I heard him get this up. The boys are waking up.
You hear them?
Yep.
Okay.
I can hear that squeak a mile away. This is why. Man, edition 2, we're going to have even more cleaner patterns. So you got to stay tuned, man. Look at this thing. Look at this thing, man. Rounding out here. Start to break resistance areas, right? Bam, that's the candle. So look at this thing. Comes to this, pops up, pulls back, right into your 50 moving average. So it bounces off that 50 moving average, pops up, comes sideways. Now we can automatically say right off the gate, at the beginning of this class, you wouldn't have been able to identify relationships between price action and moving averages. But now you can identify relationships between price action and moving average. You can say, hey, this thing has a relationship with the 50 moving average. Because you can see it so clearly. Hey man, where'd my camera go? Here we go. You want to say, you can now say that this thing has a relationship. We can clearly identify a relationship with this 50 moving average. So boom, bounce off of it. When it comes back to it again, a month later, 2 months later, you're like, okay, now it's time for us to maybe probably hit this trade again after it break this downtrend resistance. So then you do it again, and then again. Then it comes back here, a little bit of a crash pullback, but not as much volume as on the buy day, right? And then price pulls back to your 50 moving average, bounces and goes higher. This time, it doesn't bounce off of the 50 moving average. It seems to be bouncing in some random place, right? What could this be? Could it be a price support? It could just be a bounce. Like I said, like my own educator tells me, stocks, they don't have to be anything. They don't have to do anything that you want them to do. They don't have to be a way because you say so. All that matters is what's there. You don't force anything to be there. If it's there, it's there. If it's not, it's not. Like this right here. If we're saying, why did this thing bounce? I can't find any support anywhere. You can try. You can try. I mean, you can try to say, oh, maybe this right here, but you be forcing it, man. Don't force it. It's nothing. Why? Don't even worry about it. Unless you develop a strategy that has to deal with bounces in the middle of nowhere. If you don't want to use moving averages. So boom. Then look, we're not making the higher highs anymore, right? Make the higher lows. Then you got the crash volume comes in. Now the sell volume is on now. The pressure is on. The seller's like, man, we ain't making no more new highs. These bulls got to start taking profits. Mama needs some new shoes. We're about to take this thing lower, baby. So they take it lower. They can take it lower all they want. Why? Because we made money off all these bounces. You see? And we could jump on the team. Yeah, we're going to be right. I'm right with you, man. Let's see if you want to. Guys, I'm almost done. Is that it? Last one for the pullbacks. So you want to identify that relationship. You want to see those stochastics match up. Look at the CVNA. Boy, what are we noticing here, guys? We're noticing something here, right? It seems that, stocks like to pull back to that 50 moving average. Stocks like to bounce off of that 50 moving average. Look at this stock came out of its accumulation phase. I'm talking about, man, this CBNA is hot. This thing is hot. You can't tell me this thing ain't hot, man. This thing is hot. Oh, man, look at this thing. Look at this thing. Look at this thing. Boy. Man, the CBA is hot. My head is spinning right now because of this thing. I'm sorry. Look at this. My apologies. Check this out. We got the clean flat top breakout. Clean flat top. Triple tap. Boop, 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 boop. Breakout. Look at that thing, man. Pops up here. Right? Bam. Comes back down. Bounces off of that 20 moving average. Comes back up again. Double top shoulders right on your head. Right? This thing comes back down and don't bounce off nothing. No relationship now with the moving average. It's mindful. Comes back down, finds a low. Where does it find the low? Right around the previous resistance area. Right? Where do you see that? Where do you see that? I'm going to show you right now. Look at this. Imagine this, right? Remember I said that IPO day. You don't know what an IPO is? That's an initial public offering. It's when company offers their shares at a very low price to get capital from investors. And then once it hits the markets, these investors are pretty much, maybe selling a chunk of it really fast just to capitalize off of the opening price. So don't worry about that. You can research that on your own. IPO. So IPO day, stock is coming down. Stock is coming down. Let me see something real quick. Edit chart properties. Let me just make sure my candles are on open versus close. Yep. Because if you put it on net change, it distorts your picture. You put it on open versus close, it gives you a better understanding of what's going on. As opposed to net change. So, like I said, we were coming down, right? So stock comes down, but why did it reverse here, right? Price support, or maybe the Bollinger Bands were acting as support. Don't let anybody tell you that a Bollinger Band is a lagging indicator. The Bollinger Band is not a lagging indicator. The Bollinger Band is a predictive indicator. You see? Moving averages are lagging indicators. What are lagging indicators and predictive indicators? I'm pretty sure you can find a 5-minute video on YouTube explaining that before mine comes out. So, look at this thing, right? Stock opens up here. It just continues to go lower. So this is now resistance. It just is. Stock finally breaks out resistance, tries to break out here, sells off, pauses this day, then buyers are like, man, we taking this thing higher. It goes higher. Bam! Right? Finds another resistance area. That was set. Boom, stock comes down. And then where does it bounce off of? Bounces right at that old resistance area. Just testing this resistance area to see if it's going to hold that support. Bounces a little bit. Boom. Rejected by that 200. Comes down, cracks that support. And just goes sideways. Traders leave it alone for a while until it can do something worthwhile because there's other things going on, right? So get away from that because now these months are over. And then we see this uptrend starting to form. Okay, we got higher low here. First it would have been here, broke lows, so right here. Just stretch it out, give it some room, give it some space to breathe. And then we got the 2 tests here, another 3rd test, boom. Bounce around, test it again. Then finally, you got the moving averages. See, when you're looking for these breakouts, right? You want your moving averages to be tight, curled. I'm talking about pushing that thing. I'm talking about pushing the buyer, pushing them, man. You don't want it to be like, you don't want your candle or price to be able to drop to your moving average. You want that moving average to be, you want the thing to be sitting on it, like for the joyride. You want it to be sitting on it. Yeah, this is price, right? You want that thing to be sitting on it, pushing it up. So what's it doing right there? Price sitting on the moving average. Well, because look, when it's far away from the moving average, it got room to fall. It's gonna fall. See, no shorter is trying to short right on top of a moving average. They shorten into the lines den, buyers den. See? So boom. Look at that increased sell volume, trying to take it back down to price support. What happens when it gets back here to around this price support area? Gaps up the next day. Comes back down to test that thing a second time. Let's see how strong it really is. And look at that. Once it holds that price support, pull back to price support on low volume, because traders want to know. Is you down the rut? Is you down the ride, baby? Traders want to know. Hold on. Traders want to know. And they found out. Look at that thing, man. See? This is what it's smart, man. Look. This is our entry, right? Get smart, forget dumb, forget all that stuff. We want to know what our system is. We want to know what our job is. We want to know how we're going to make the money. We want to know where to get in, where to get out, and why. Not worrying about some hedge fund, smart money this and dumb money that, and not worrying about that. Just want to make the money. Want to capitalize off of stock analysis. All right? So look at this thing, man. Breaks its downtrend as it's bouncing off of price support, 1 level, and bouncing off your 50 moving average, 2 level. Boom. Strong. And you got low volume. And look at this joint, man. You guys think I'm playing. You think I'm playing. Look at this. What is this? What is this? Oversold stochastics. Oversold. Hey, guys. We might want to see a reversal in the other direction pretty soon. Keep an eye out. Yeah, you might be right about that. I'll keep an eye out. Then, we're also at price support, but also at the 50 moving average. Also, just barely pierced the lower Bollinger Band, but you're at that Bollinger Band support. Also, you're at that tight consolidation. I'm talking about your thing is getting, this thing is getting squeezed. You tested support twice. It held the first time, gapped up the first time. Second time it just held. Oh, man. I mean, it's retesting a breakout of a clean, I'm talking clean bull flat top breakout. Because this is how it looked before, right, guys? This is how it looked before. Let's try to push this thing over, can we? This is how it looked before all the good stuff started happening. This is how it looked. Let me see. Sorry about that, guys. Sorry about that. What if you've seen this like this? This is what you got to do. You got to ask yourself, man, what if I seen this, man? How would I have traded this? Would I have even been watching this thing? You got to say to yourself, sometimes, like I said in the beginning of these classes, you know, we want to give ourselves perspective. We want to say, you know, what's the possibilities? Let's move this thing around. You know, let's try to look at it from a different angle. You might can do something, man, if you get some juice behind you. All right? So look what happens, right? This is what happens. So we're looking at this thing, and we see it's coming up to a level. We see it's coming up to a level. It's getting sold off around that 25 area. It's not holding. So then day goes by. Look at this day. Now this day, you've seen it this day. You're like, oh, snap. Look at this CBNA. It might be on, right? And then look at the next day. You're watching it. Traders are watching this thing. Why? Because traders want to know. Right? Traders want to know why. Oh, you're going to be the next one that's going to grace my portfolio? with some well-deserved profits. Then you get you a nice little pullback. You get that pullback to the 9. Does it hold the 9? A little bit it bounces and then it cracks the 9. Let's see, and it continues its descent. It continues its descent. So, a method that I have learned as a new trader to deal with the inconsistency of pullbacks is to have a downtrend line. Have a line in the sand on that puppy like what I got here, and I connect it across those wicks. I don't use the bodies because the wicks are a part of the story. You're not going to cut out certain parts of the story just because you want it to look a certain way. You got to. I think that is better if you use the wicks. But in a case like this, you know, when I got it on top of here, that's my resistance level. So if it pops out and wicks out above it, I'm not going to move my resistance. I'm not going to move it because it's already respecting these levels here, and it's showing that it can't hold above there. So it's not a new level. Until it shows it can hold above it, like this one did. This candle showed that it can hold above that level. Right, some traders are watching this thing. Traders want to know, right? Now look, we got here just some bunch of red days. So you scrolling your charts, you staying on top of it, right? And then, you know, you doing your morning scan. You know, you see that this thing is back at price support. And now you notice that, you know, stock, the CVNA is gapping up. Boom, gapped up, but it doesn't break that downtrend resistance from there. See, that saved you. But if you're a new trader, when you start to practice these stuff, thinking that you can go into the market with real money and just be nice, like I did, going to be met with a rude awakening. So, look at that. Respected that downtrend resistance. Come on. Then pull back to price support again. And now, but the 50 is there now. Okay, so we got the 50 there now. We got this nice breakout. We got price support right there. So that's almost 3. And we got Bollinger Bands. That's almost 3 or 4 levels of price support that we can use in our advantage. And then we got oversold stochastics. We got low volume now on the sell side. There should be some fresh buys, some algos up in this thing. Then we got a break over that downtrend resistance. Then the next day was it was undeniable. The next day was undeniable. You could not deny. Next, that this day right here was a possible buy. You cannot deny it. Then what do we have? That trend. That high low. Then now moving averages. It got grabbed up by the moving average. It's not the amazing. Come here, boy. Grab him. Hey man, where's my camera at, man? Come on, Dukes. Come on, Daddy. You're trying to play me out, man, from my viewers, man. Now look at that thing, and then it's holding that 9, but then it starts to go parabolic. It starts to go parabolic. You see? And then, but now where would our stop be? Like right here by the 9? Yeah, it could be. That's what it's supposed to be, you know. But then you might want to, as you develop your strategy, you might want to say, I'm going to leave my stop under the candle right here. If it goes above if I start going parabolic, I got to raise my stop under the last candle, or 50% of the last candle. Boom, look at that. Boom, look at that. Boom, look at that. Boom, that's what we in this game for. Then the short seller's like, all right, man, y'all had enough fun. It's our turn now. This is the market now. But then, you know, it's always somebody that cracks. Good morning. It's always somebody that folds and cracks. It keeps pushing higher. Ooh, ooh. Then the bear's like, man. All right, now we coming hard on your head now. You better ease up now, hey boy. Look at that with it. They couldn't contest with that buy volume. Look at that. Squeezed.
And I finally got to almost.
Look at that. Broke out again. Came back to price support. This is price support now, right? You got diagonal resistance that's broken. Now it should be support. And it was support for that for a couple of days. Boom. Broke it a little bit here. But still then kind of bounced a little bit as the 50 come again. The people love that 50. Oh man, dang, this DNA is sweet. And look at that, man. Oh man, this is crazy. Look at this. I can't take it. Oh. But look at this thing, man. Bless you, man. So, man, maybe you need to put a shirt on or something. Look at this thing. Man, this is crazy. Guys, we've been in this class for a long time, man. It's been almost an hour and 41 minutes. You know, I'm trying to take it easy on you guys. I'm trying. It's hard. That's it, though, man. This is CBNA. This is the last one. This thing was freaking jam-packed. This thing was jam-packed, guys. But look at that pullback, man. We learned a good bit about pullbacks, and you know, now we know what the pullback is. It was a time when I didn't know what the pullback was. It was a time when I didn't know what a bull flag was, a bear flag was, and the rest of the setups we're going to cover. It was a time I didn't know these things existed. I had written my life off. My life was only for my children. It's the only reason I stay alive, is to give them life. Because my life was done. I just found myself working in the 9 to 5. Found myself working 9 to 5. I'm like, you know, got all my certifications and stuff. Now all I have to do is stay healthy and show up. I had no passion, nothing to build, nothing to do. Until it found me. And I've been looking for it. Been looking for this. And he found me, finally found me. Maybe at the perfect time, who knows. But guys, I want you to look at these pullbacks in the next class. In the next class, we're going to go over pullbacks to the short side. And then we're going to move into, we're going to go to pullbacks to the short side. And then we're going to move into our last swing trading part of the class, which is going to be up gappers and down gappers. So the next class will be about pullbacks to the downside. Let's just focus on that. But for now, if you're starting to look through your charts, I want you guys to look at those pullbacks. Look at the relationships that stocks have when they're in the run-up phase. When stocks are in that run-up phase, look at the relationship that they have with the different moving averages. You know, look at their breakouts, look at the pullbacks. So start looking for the flags. You know, then start looking for your pullbacks. Look for your pullbacks to price support. Look for your pullbacks to moving averages. And man, that's pretty much it, man. This thing was beast. I didn't expect it to be this long, but this is what it is, man. Knowledge is power. Think, for surely it benefits the thinker. All right? Do good things, like they say, like my man Charter Man Dan, do good things. Let's win. Let's get this money. Let's grow, learn, be great, because we know we can and we are.